Good morning, everybody. It is Tuesday, January 23rd, 8:46 a.m., and we are back for another Market Open. Happy Tuesday, everybody. Hope everyone's doing well. We've got a lot of stuff to talk about today, a lot of stuff that's actually very interesting. China has an economy that is under fire, and they are trying to save that economy, and so they've done some things last night that we got to talk about for how they're trying to save that economy, particularly, what they're trying to do in regards to stimulating the economy and the 2 trillion yuan they're using to stimulate the economy. Alibaba right now up 6% in the pre-markets. Baba very excited. A lot of these Chinese stocks excited based on what's happening right there. Second, we got to talk about Bitcoin falling below 40,000 and sustaining itself below 40,000. Ironically, the Bitcoin stocks are not in the same position. The Robinhoods of the world, the cryptocurrencies of the world, the Bitcoin miners, they're actually doing really well in the pre-markets, which is kind of weird given how bad Bitcoin has fallen. We got to talk about Verizon as well. Verizon had a pretty good fourth quarter. We actually have a lot of earnings we have to get to. Netflix, we have some breaking news on them. We're going to cover them tomorrow. Verizon had a great quarter. It's up 5% right now. Lockheed Martin had a pretty good quarter. A lot of these companies actually are doing well. I mean, I'm not seeing too many earnings right now in the morning that are doing bad. So a lot of these earnings are doing well. And then finally, we got to talk about Tesla and what the hell is going on with Tesla and the problems it continues to remain in, given that tomorrow we have Tesla earnings officially on the channel. So we got a big market open to get into. Let's get into it. Top Dasher, Gift Magic, Tony, Sean, Adan, the Great One, Rick, Broccoli Bob, Marcus, Felicia, Brad Appeal, Zocold, Miami Ren, Lucas, Sasky Rose, John Ray, Chris, what's up? Missy Riger, Wealth Basic, Joaquez, Mr. Seymour Duck, June, Miami Ren's up or down today. I have no idea, but if the trend continues as it has over the past couple of days, it seems like we're heading up. Joshua, David, Benny, Jason, Nicholas, MD, Jittery Hober, Sundown Sam, thank you all for being here. All right, let's get into it. Before we get started, just want to give a quick shout out to a OG subscriber of the channel, Alice from Australia. She tweeted me that it's her 30th birthday today. So we can all wish happy birthday to Alice. Alice, I hope you have a great, great birthday. I think she's been watching the channel for a year and a half now. So really, really appreciate you being part of the channel. And 30 years old is a momentous birthday. It's that's a big decade in people's life. I'm going to be there in 4 years. And in a couple months, it'll be 3 years. I'll turn 27 in October. I'm turning 27 on October 27th, which is kind of crazy this year. But I'll be seeing 30 very soon. So I hope you have a great, great birthday. Thank you so much for being part of the channel. And yeah, have a fun 30. There she is. She's there in the chat, Alice. Her initials are the same as my initials, AK. We got the AK initials. And she's from Aussie. I want to go to Australia because I love the accents in Australia. And I've never been to Australia. You guys know I love the accents. I don't know why I love the accents. I just love the accents. Maybe I love kangaroos. I don't know. I just love Aussie. And she's like the first subscriber I ever had that said, well, I'm from Aussie. And I'm like, okay, cool. You're my favorite Australian subscriber then. Thank you, Alice. Have a great, great birthday. Okay, cool. So I think we should start off with, do we do China or Netflix first? I think we'll do Netflix first. We'll do Netflix then China because Netflix is really interesting. So here's what happened just 20 minutes ago, the news that broke. And a lot of you guys probably don't even know this is a stock that exists. How many people know the ticker TKO? How many people know it? TKO. It's actually, now that I say it out loud, I understand why they called it TKO. But let me know if you know that ticker symbol. This is the breaking news on Netflix. And then we're going to do a little bit of preview of what we should expect going into Netflix earnings because it's going to be an important earnings. It used to be a big tech company. Now they got taken out of the FANG since we have Magnificent 7. But it is important. Okay, so this is what was just happened 40 minutes ago. Netflix has signed a $5 billion deal to stream WWE Raw. It's one of the biggest wrestling events in the country as an attempt to integrate more into live streaming. WWE Raw gets 17.5 million live viewers a year, not just regular viewers, but live viewers, which is, more monetizable, more important. And it seems like Netflix is serious about entering live. Now, Netflix has made a host of attempts to get into the live space, but a lot of them have, I don't want to say flops, but they've just not been that interesting, right? Like there's not something like there's GoTo TV that I have to go to Netflix to be able to get. WWE Raw is very personal to me because I used to be a big wrestling guy. Like I used to really watch wrestling. I was obsessed with it. I cared about it a lot. Now I don't care. Okay, so I grew out of my wrestling love after like 3 or 4 years, right? You just get older and you stop caring about it. A lot of it's fake, so it's just like it's at the end of the day, it's worldwide entertainment, right? But they have a huge audience across the world. I mean, they sell out arenas every single night when they perform, and it's a pretty big deal. So for Netflix to get these people onto their platform, I mean, is not an easy thing, and they had to do a lot of negotiating, but they got the job done. On top of that, the parent company that holds Netflix, TKO, which is the TKO Group. It also stands for The Knockout, so I understand why they picked that ticker symbol now. They're up 22% in the pre-markets. As you can see right here, they're at $94 in the pre-market. Now, why are they up in the pre-market? Not only because they got this Netflix deal, but because The Rock, who used to be a WWE wrestler, Dwayne Johnson, is joining their board. I mean, this was a really good news day for TKO. They got Dwayne Johnson, who's like the most popular guy probably on the planet, quite frankly. I mean, he's just like universally everyone knows this guy. They love this guy. And they got a big Netflix deal. So he's joining the board of directors. Netflix is going to be, dishing out a decent amount of money to be able to get these guys onto their platform. And the hopes are that Netflix is going to make back that $5 billion with an advertising revenue by getting people to come to the platform that care about watching WWE, while also having they're having good content, for their ads to be played against. So win-win for Netflix. Really exciting that Netflix is being able to get this done. I think the broader question, though, is Netflix a stock that is interesting at these prices, given it trades at 35 times forward earnings? So let's get a little bit of coverage on this, and then we'll get into the China news. But here's what some analysts have to say about what's going on with Netflix.
Going to be reporting quarterly results after the closing bell today. The stock now up more than 20% in the last 3 months. Joining us right now to talk more about it, Tom Rogers, Newsweek editor-at-large, executive chairman of Orbit Gaming and Entertainment, as well as a former CNBC president and now a CNBC contributor. Tom, always great to see you. What are you expecting this afternoon, and what are the broader implications, if there are any, for the rest of the industry? Which is to say, is Netflix in a category of one, a category of its own, or is there something that we can take away from this?
Well, I think Netflix is in a category of its own, and I've been saying that for quite some time. I remember you asking me a couple of years ago what was going to be the most valuable media company out there, and I said Netflix, and clearly it's become that. You take the parks business out of Disney and the media comparison, Netflix is probably about 3 times as valuable as Disney right now. But the thing that I think really distinguishes it when you look around the rest of the media industry is just the ability of management at Netflix to really focus. They have no M&A intrigue. They have no activists. They have no linear decline. They don't have to focus on sports rights. They don't have a depressed stock. They got no drama, which is why I guess Obama is working with them.
Yeah, so I mean, look, I agree with him. At the end of the day, Netflix has the ability to focus. They haven't had the kind of worries that a lot of these other streamers have had, like the Paramounts and the Peacocks of the world. And so Netflix, they should have a pretty good earnings, in my opinion, today, and earnings that is better than what a lot of people expected. And if they do, then, this is going to be at least one of the first tech companies that performed on earnings. And we'll see how they keep going from there. Martin says, Olin Podcast was blasting Netflix last week. They couldn't figure out how Netflix would continue to provide compelling content. Yeah, see, that was the same concern I had a year ago about Netflix, or really in 2022. I was like, I just don't know how they're going to keep making really good content, and they have to keep paying for the content. And like YouTube, you get the content for free, all that stuff. But I've come to realize, I mean, Netflix has been able to adapt. They've been able to innovate. They've been able to, Stranger Things, Beef, all the originals they had, Money Heist. You got to give them some credit that if they've been able to come up with this stuff, it means that they have real studios that are unique. And because those real studios are unique, they're able to just make better content than everybody else, which is really important. Okay, let's talk about China, and then we'll get into Verizon. We'll talk about Verizon as well. I did see that Verizon's up 5% in the pre-market, so very good quarter by Verizon. So let's first talk about China real quick, and then we'll go from there. So this news broke late last night in terms of what China's doing. And I mean, they're essentially trying to save their economy. China weighs stock market rescue package backed by about $278 billion. Bloomberg reported this. Policymakers are seeking to mobilize about $278 billion, mainly from offshore accounts of state-owned enterprises. So it doesn't seem like they're printing this money. It seems like they have these assets, and they're trying to take from these assets and dumping it in to the stock market as a part of a stabilization fund to buy shares onshore through the Hong Kong exchange link. The China Security Regulations Commission did not respond for a comment. But Chinese stock markets have had a wretched start to the year with patchy economic growth and renewed slump in home sales last week, solidifying foreign investors' resolve to steer clear. Basically, since the beginning of 2024, Chinese real estate has sucked. The Chinese stock market has sucked. We saw what happened with Tencent a couple of weeks ago, where their market cap dropped by $43 billion because of regulations. And really, I mean, Alibaba getting to its lowest valuation in almost 7 years. Investors have realized that they just can't bet on China. And so China has not made itself an attractive place for foreign investment, which is why they have to do their own investing to save these shares that are basically coming underwater. Chinese stock market package is a welcome measure and shows increasing responsiveness from the authorities, but under 2% of its GDP, we feel this is still inadequate, said Aninja Mitra, one of the analysts at Mellon Investment Management. Global money managers who have been global sellers of Chinese stocks over the past pandemic recovery sputtered. It said it will take a long time for the major stimulus to repair the property sector, which at one time accounted for the quarter of the economy. Overseas funds have sold roughly $1.6 billion in Chinese equities so far this year, driven mainly by European active funds and Hong Kong passive money. So what does this mean for investors? Well, right now, if we take a look at Alibaba and some of these other Chinese companies, they're doing very well in the pre-markets. And the reason they're doing really well is because the market is like excited for the fact that China is trying to do something to save their economy. I mean, look at Alibaba. It's up 6% right now in the pre-markets at $73. Let's take a look at some other ones like NIO. I would imagine NIO's up a little bit. Yeah, look at that. NIO's up 6.5%. Now, my fear is that even though the Chinese government is trying to essentially bring in some more dollars into their stock market, they have not changed the fundamental culture of investing in China. And so they could pump the market with another $500 billion. At the end of the day, they're just buying Alibaba shares. They're buying NIO shares. And the government can't just keep buying shares of these companies. That's not going to get these companies to perform long term. You need to have other people. You need to have people like you and me. They're like, I want to take a chance on NIO. I want to take a chance on Alibaba. And we have to feel comfortable enough to put our money into these companies outside of the fact of knowing the fundamentals of the company. Like after that, then it comes down to external factors. And if the external factor is that in Beijing, they're ready to, chop your head off if you disobey them and the company goes underwater overnight because of some regulation, well, that's not an exciting environment to invest in. I think China is kind of screwed in this regard, which is that if they just keep pumping up their own stocks, that's not going to help them. That's going to help in the short term, sure. Long term, that's not going to change until you change the culture of the country. And it doesn't look like the culture of the country is changing anytime soon. So although we are seeing some momentum in China, it really is not a good look for them. I mean, in the United States during 2008, when we had to pump our own stocks and stimulate the economy, that was because of bankers doing a ton of mismanagement and subprime mortgage loans. That was just inadequacy and ignorance that a lot of people had. And unfortunately, it caused an entire recession for the United States, and the United States caused a global recession for the world, because if the United States falls, everyone else falls. For China, it's them just being arrogant about their own communist values and, their ability to one step over the tech companies and not, act as if the tech companies are more powerful than in the United States. The tech companies honestly are probably more powerful than the government, which they kind of should be. You would imagine that companies should have that power because, companies are private entities and the public should have some say over them, but they shouldn't be necessarily more powerful than them. And so from that perspective, China has kind of screwed over their economy, and I don't think a lot of people want to invest. So really, really interesting to see what's going to be happening from there. But so far, China is in a very tough situation. And I don't know how investors are going to be that happy over them, basically saying that we're going to pump up our stocks, because that to me is not the biggest argument for why their economy is going to do well. So that's the China news. We'll see how the market performs as we get into the market open in about 30 minutes. But so far, China stocks are up, and they're not doing it too bad at all. Unless Baba goes to 40 or 45, I'll buy some other shares. Then I'm all set on China. Yeah, and again, at this valuation, Baba is ridiculous. It is absolutely ridiculous. Alibaba is I think one of the cheapest stocks in the history of the stock market, given how the valuation is. And we talked about the numbers yesterday, but it's in China. It's in China, and that is the problem there. Okay, let's talk about Verizon. So Verizon had a great earnings, and we got to go through a bunch of these different earnings because it showcases that the economy is actually in a good spot. And it looks like people are not stopping their cell phone plans, or they're continuing to buy more cell phone plans. So $35 billion in revenue, down a little bit year over year, but not much, 0.3%. $134 billion full year revenue, that's down about 2.1% year over year. $11.7 billion adjusted EBITDA, $47 billion full year adjusted EBITDA, adjusted EPS $1.08, full year $4.71. So as you can see on the highlights, all these numbers are declines year over year, but that isn't that relevant to the market. What they really wanted to see is number of growth in subscribers, which we'll see in a second, and number of growth in revenue from the wireless service. And that's where you have a ton of growth. So as you can see right here, wireless service is up 3.2% year over year, $19 billion in revenue, full year $76 billion. And then you got their total business is up $30 billion year over year in the context of wireless service. Operating metrics, they added 413,000 broadband net additions, 55,000 Fios internet net additions, and their churn is under 1%, which really isn't that bad in the context of, their Q4 operating metrics. They now have 144.8 million total wireless retail connections. So, I mean, look, it's a pretty decent quarter at just looking at the bare numbers. Their number one thing is 5G adoption is getting bigger. Their subscribers are going higher. And as a result of that, even if their revenue is declining year over year, the stock is, the stock got sold off pretty aggressively. So even if you have some declines in top line metrics, as long as you're growing and you're giving out that juicy dividend of, what is it right now? The dividend is, I think about 4%. But at one point, the dividend 6.72%. At one point, the dividend was 8.5%. As the stock went higher, the dividend came down. And we're up 4.5% in the pre-markets at $41.38. So Verizon killed it, did a really good job. Let's see if they can sustain this momentum and see where the market wants to take it. But so far, two verticals that people thought would be negatively affected by high interest rates, one of those being regional banks, and the second one being companies like Verizon because of their debt. And obviously, if interest rates are higher, then their debt payments are higher. So far, they've been wrong about both of those arguments because regionals have continued to do well because the Fed saved them, but also because banks are not going anywhere, right? People still want to bank with these companies. And as rates come down, their loans the losses on their loans will come down. And then second, Verizon had interest on their loans from years ago that they locked in terms of a certain percentage. So they don't have to pay 5.5%. And they're still performing because even in a high interest rate economy, people need to buy cell phones. People need to buy 5G. So regionals and the cell phone companies so far have done well, even though a lot of people thought they wouldn't do well. And, they're not in the necessarily worst position. And if you have Verizon, you're making some money. Bears wrong, never. Yeah, dude, if you've been a bear. So apparently on Finance Junkies last night, we found out that Everything Money, if you guys remember that YouTube channel, it's a popular YouTube channel. It's not like it's a bad channel or anything, but it is a popular channel for a certain type of investors. And I remember I watched them a while ago. I was like, I like them. And then, kind of just, I kind of grew out of it. Kind of just got boring when they just kept analyzing a stock. It just wasn't that interesting to me, especially because they have the same metrics to analyze a stock. There was no the thing that got me upset about the channel is like when they would analyze a company, it would be pure numbers and nothing qualitative. And when you do that, you lose me as someone who wants to understand the story and outside of just the numbers. Apparently the head guy of Everything Money was shorting NVIDIA. Like badly. Like he took his brother's money to keep shorting NVIDIA. And I was just like, okay. And now I think he started that short at around $200, $300. Yeah, he's underwater on that short. And apparently he's not covering because he wants to go down with the ship. So that's not going to be fun. And so speaking of bears, like, dude, bears can be right in the short term, but NVIDIA is not going anywhere. Right now in the pre-markets, NVIDIA, $597. I mean, even though yesterday it touched 600 and every stock that went up yesterday kind of declined a little bit as it like Palantir at 1832, then it went back down to 1770. NVIDIA went to 600, it went to 597. Like it didn't really, no one really sold it off. Like everyone just kept buying it, even though it fluctuated a couple bucks, right? So we'll see what happens, but that's tough to short a company like NVIDIA. It's really tough to short a company like NVIDIA and be burned because now for him to not be burned on the short, NVIDIA has to go back to $200-$300. And I don't think anyone in the right mind thinks that's happening. Like if you think that's happening, that's the same thing of thinking Tesla's going to 50. It's like you really have a perspective of the world that is so ideologically based, so rooted in your own assumptions that you're ignoring reality. And that's not a good thing to do. Let's look at PayPal. We got to talk a little bit about PayPal because PayPal CEO this morning is doing some interesting things. So Alex Chris is going to shock the world on January 25th. I will be live on the channel. Everyone needs to be here to see how he shocks the world. And last night, Casey Neistat, who's a very popular YouTuber, said, "Dear PayPal, I hate you." Okay. Alex Chris, CEO of PayPal, says, "DM me and let's see if we can help. Sorry for any trouble we've caused." It's a pretty stand-up thing to do when a big influencer says, "Hey, I hate you." Not for the customer support team, but for the CEO to reach out and be like, "Dude, I got you. What did we do that was wrong?" It's probably like, I'm sure PayPal's just like holding some of his money, right? Because they do that for like fraud mitigation and stuff, and they end up getting a little bit too obsessive over it. So that's probably what, he hated. And you got Alex Chris doing customer service. You had another guy who said he'll only reply to Casey Neistat, not sure he'll reply to any old person. Alex Chris says, "Can I help you with something?" He's responding there. And then this was the funniest part. This is a guy named Grogu. This is an investor who on Twitter is super obsessed with Palantir. I love Palantir, obviously, and we're all part of the Palantir community, but he hates PayPal. He absolutely hates PayPal. He thinks that everyone investing in fintech is an idiot. And he would tell you this himself, right, if he was here. And so he said, "Grogu Capital now has been deactivated for 2 years with 10,000 in it. Can you help us too? Or are you, after you're done with Casey, or do the little guys have to go through the basic support?" And it's just funny because Alex Chris said, "Shoot me a DM and we'll figure it out." And it's hilarious because, Grogu says like 17,000 negative things about PayPal every day. And so the CEO of the company that you shit on is now, responding to you to try to give you some customer support. It's really cool. It's really, really cool. So why is he doing this? Either you think this is desperation, and that if the CEO has to reach out to people on Twitter, that the company's in a very bad situation and that it's not going to go well. Or you think that, what? I like that the CEO is doing this. It's very difficult for CEOs to be like this. Most CEOs don't actually reach out. And it's a form of publicity, but also a form of, hey, we're trying to do something and really win. And if we're trying to do something and really win, then maybe, that's why it's a good reason for the CEO to be doing this. I interpret it as the latter. I think him reaching out is bullish. I think he's trying to show that he's a CEO that's doing things that are different. Again, when he was at Intuit, he did a lot of stuff in regards to AI and machine learning, particularly helping that company reach new levels. And I think he's going to bring a lot of that same experience to PayPal, which is going to be important. Kelly in the chat says, "PayPal called me personally on Saturday after I made a small complaint on Twitter. Before I even responded to their emails or calls, they just corrected the issue. Absolutely wild." That's also insane. Kelly tweeted some stuff over the weekend about how PayPal was like messing up in certain areas. She has a bunch of e-commerce websites, and they personally called her because she tagged them on Twitter. Imagine getting a personal phone call by a company that you use, a company software you use, in order for them to correct the issue because they saw you on Twitter. It seems like we're entering into a new era of PayPal just by the sheer customer service that they're giving. Now, in terms of what they're going to do for shocking the world, I spoke to a bunch of people on Twitter last night, and one thing people said is, what if Twitter ends up creating PayPal creates some type of marketplace, and this marketplace establishes higher transaction margins because they drive more traffic to merchants like Kelly, and then Kelly potentially pays a little bit of a fee to get some of that traffic that PayPal's providing her because PayPal has 428 million users. And that traffic leads to higher conversions for her e-commerce websites. I don't know what they're going to do. They do have the data from the sell side and the buy side. And if they could use that data from the sell side and the buy side to create a symbiotic relationship that drives higher margins on the underlying business of PayPal because they're driving more customer conversion checkouts for the merchants, and they're making more AI-oriented, personalized recommendations to users. Like, imagine I go to paypal.com and they're saying, "Hey, Amit, buy this water bottle." Like, they've never done that. They've always been a payments platform. They've never been a gateway between a connector of recommendations from a advertising model from the merchant to the consumer, right? They're just that thing you press at the end when you're going to check out. If they do something like that, I do think that is shocking the world, because I don't know if it's going to work, but I do know every merchant would want their products somehow integrated into that overarching recommendation engine that PayPal could create and then establish as a framework to be able to drive higher revenue and traffic for the merchants. At the end of the day, if you're a merchant, that's all you give a shit about. You care about, can I get more people to my store? And advertising is already so difficult to do, right? Ads are expensive when it comes to Facebook and TikTok and Instagram. So if PayPal can get you more traffic, shit, dude, that's not a bad idea. That's not a bad idea at all. Kelly says that would be absolutely incredible. I just don't know what that would look like. Yeah, and that's why I think January 25th, we're going to be live streaming it, and we got to see we got to see what they're going to try to say, really what they're going to try to put out there. Ryan says, just an FYI, Alex Chris left QuickBooks. Their customer service went to shit. He is customer service driven. Yeah, QuickBooks, that was the company. Thank you, Ryan, for that. QuickBooks was, Intuit owns a variety of different companies, and QuickBooks is one of the products they have underneath that parent company. And that was what he was responsible for. Intuit stock, by the way, Intuit stock over the past year is up 53%. And Alex Chris, I just want to check out his official title. At Intuit, he was the executive vice president and general manager of small business and self-employed group. So QuickBooks makes a lot of sense. So he led an 8,000 person organization that delivered QuickBooks to over 8 million customers and MailChimp to 13 million users around the world. They did buy MailChimp for I think $12 billion a couple years ago. So you got a guy who was leading. I mean, he wasn't the CEO, but he was pretty up there in terms of the stuff he was managing at Intuit. He was at the company for 19 years. I think he sounds like the perfect guy to be helping PayPal. PayPal is all about small businesses. This guy was leading 8,000 person organization helping small businesses. So if they can integrate, and I'm sure QuickBooks had a ton of innovations. QuickBooks is, I never used the product, but I've heard about the product, even though I've never used it. It's a really it's a product that is definitely well known if you have any small business, because you've at least seen an ad for trying out their product to do your taxes and stuff like that. I would imagine he's going to be leveraging AI and data in some way to bring some unique innovation to PayPal. And if they do, PayPal might do very well. If they don't, we'll see what happens. But overall, not too bad for Alex Chris and PayPal as well. Let's take a look at equities and see what we got going on here in the pre-markets and where things are at. Right now, NVIDIA continuing its run to just do really, really well. I mean, NVIDIA, again, 596 in the pre-market, 597, just doing great. Alibaba's up 6%, Verizon's up 4%, NEO's up 6.8%. S&P 500 continue. S&P 500 closed at the highest level it's ever closed at yesterday. So it's at 484 right now. It's doing well. Tesla's up a little bit in the pre-markets at 210. Apple, look at Apple at 194. Apple got downgraded to the death of it last week, and now it's trying to make a comeback back to $200. Microsoft at 396. Meta at 383, Google at 147, Amazon 154, Tesla again at 210, and Nvidia at 596. Let's look at some of the crypto stocks. So we got CleanSpark down about 3%, Coinbase down 5%. Coinbase got hammered. Marathon down 4%, Hut 8 Mining down 4%, MicroStrategy also 449. MicroStrategy got hit, dude, down 4%. Remember, MicroStrategy needs to be at $517.93 by January 2025 in order for their debt to turn into equity, so that they don't have to pay back all the billions they borrowed to buy Bitcoin. So they just need to make sure they get to that level. Right now, they're at 450. This stock was at 730 on January 2nd. Robinhood is the only stock that's actually green right now in the crypto stocks, because it's not only, a crypto company. Also, some DD that we saw over on Twitter. Someone tagged me in a post that said they are transferring their 401k on Robinhood. And let me see if I can pull it up as well. But they were messaging with the Robinhood people, and the Robinhood people were like, hey, please make sure you answer the call tomorrow, because we're not going to call you again. Yeah, let me pull this up, because we have too much demand. So you really need to pick up this call. So he says, look, just a reminder, your rollover appointment is tomorrow at 2 p.m. I'm looking forward to helping you get this done. Please note that if you do not, you will have to reschedule for 2 to 3 weeks from now due to very high demand. That's some good DD on Robinhood, dude. A lot of people are bringing over their 401ks, their Roth IRAs, their brokerages onto Robinhood by January 31st. I think the promotion ends, and they're offering 3% match on your IRA as well, uncapped. So a lot of people are taking, and you have to keep the money there for 5 years. So for everyone who's like, oh, Robinhood is just wasting money, it's like, no. They're going to make their money back on this money. And if you take it out, they're just going to take away the bonus that they gave you as well. And the thesis is, when you join the platform, it's so friendly to use that, you're not going to want to leave. Coinbase downgraded by JPM. That's another reason it's down 5%. As we see in the chat, they put it from 170 to 150. That's their price target. So that's why we're seeing another decline on Coinbase. I mean, look, the other reason we're seeing a decline is because of Bitcoin. Look at Bitcoin. It's down 3%, 38,700. All the people that said it was going to go to the absolute moon at the ETF approval, they were all wrong. Everybody. Everybody was wrong. And, it was a sell the news event. And so the question now is, where's the bottom on this bad boy? Like, where does it stop? Is this, the place where people buy? Is this the place where people, continue to sell? If you have gains from 15 grand, do you just take your money and run? Or do you think, oh, this is where I double down? I don't know. I mean, really, I have no idea. The halving event obviously is coming up in April. And I'm skeptical now of how big that's a catalyst that's going to be. If the ETF was, preached as some amazing catalyst and it got sold off, maybe the halving event also isn't the biggest catalyst. Now, historically, if you look at the charts, after the halving event, we have an amazing run up in Bitcoin. So historically, it should do well, but I don't know. We will have to see. I do think if by the end of the year, the S&P rallies to that 5,200 level, that you would see a rally in crypto. But right now, crypto is performing completely inversely to the growth stocks. And that's weird because usually that doesn't happen. Usually Bitcoin trades like a growth stock, even though people say it's like a hedge against inflation and it's like, no, it trades like a growth stock. It always has. That's why in 2022 it fell to shit, because every growth stock fell to shit, right? But so far Bitcoin not doing the best and probably needs a little bit of support to get back higher. SoFi right now up 5% or up 3.79% in the pre-market. It was up 5.74% yesterday, $8.22. Earnings is coming up January 29th. I'll be streaming that live on the channel as well. I think earnings are going to be good. I think they're going to deliver GAAP profits. And I think as long as they deliver the right guidance and they're growing at about 34% year over year, the stock hopefully should be able to get to 9 and stay above 9. I know that's been a tough place. I mean, it's hovered in that $8 range for a while, hovered in the $7 range for a while, went back to the 6s in November when everything was going up and SoFi was down. So I think GAAP profits is hopefully going to establish the final thing the market needs to think that it's a legitimate company and get ready to give it somewhat of a premium, because right now you could argue it's getting zero premium when they're profitable. And the question becomes, how much profit could they actually be able to produce when it comes to SoFi? Mike says, good morning. Did you see the chat about ADM after seeing it drop yesterday about 25%? I'm interested. They have some accounting issues, which was the cause for the drop. I did see that ADM fell. I don't know exactly why they fell. Obviously, those accounting issues probably is an issue. They're up 1.66% right now in the pre-markets, down about 25% yesterday. I have to do a little bit more research into this company. I did see yesterday it fell badly. I don't know if it's the company you want to get super excited about just because they fell 25%, though. I mean, I know usually that is something you want to look into, but if it's an accounting issue for why they're falling 25%, the bull case is that it's a BS issue. The bear case is there is probably something wrong. So I'll have to look in a little bit deeper than that and then give my thoughts on that one. But yeah, that one did fall about 25% yesterday. Franco James says Tesla has nothing more to surprise for their earnings. I think Tesla earnings, I agree with you. I don't think Tesla earnings are going to go well. I think Tesla earnings are probably going to suck, primarily because we kind of already know the numbers. It's not like the numbers are that amazing. The energy business, even if it grows really well, the automotive business is probably not going to be growing that dramatically. Cybertruck is not really in the market yet. It's not going to be producing massive amounts of revenue. I think Tesla's in a tough position, but I think that's okay because this is not a company you want to judge quarter over quarter. Obviously, this is a company that over the next 5-10 years is going to be one of the most, in my opinion, interesting and unique companies in the world in terms of what they're able to do. So if we get this bad boy under 200 and that 180, 175, maybe 165 range, I think it's the opportunity that a lot of people missed out on in 2023 when the market was just recovering, right? Because then it went from 100 to 165 and no one wanted to buy at 165. Now, if it goes from 250 to 165, I think it'll be a much bigger of a buy. The thing is, ARK will be under deep, deep water if that happens. Like ARK right now has had a horrible year. I mean, Coinbase has sucked. A lot of their companies have sucked. Teladoc has sucked. Tesla obviously has sucked. DNA has absolutely shit the bed. She bought another 93,000 shares of DNA yesterday. I mean, it's had all-time lows. Like ARK has not had a good year so far. And I know we're only 19 days into the year, 23 days into the year. But if Tesla gets to 165, ARK is, that's the third largest position. It's just not going to be in a good spot. So granted, if it gets to 165, I think ARK will consolidate and make Tesla their number one position. They'll sell out of a lot of stuff because they believe so deeply in it, but it will be affecting shareholders of ARK for a while if that happens. Tesla, they're going to either give us bad news, then announce the Model 2 or the Roadster. Imagine they announce a $25,000 car tomorrow. Could you imagine? That would be like crazy, dude. They're like, oh yeah, by the way, we're going to announce this brand new car and it's already ready. It's being produced. Imagine they kept it under wraps somehow for so long. It's probably not going to happen, but if it did, that would be wild. Tesla's all about the guidance. Elon better behave. Yeah, I also, I don't think Elon's going to say, I think Elon's been a little humbled after the Twitter stuff where he posted something quote unquote anti-Semitic, all this stuff. I think he's had to kind of go on an apology tour. I think he's going to be a lot, more reserved in terms of voicing his opinions, because I don't think he wants to be that outspoken anymore and just deal with more shit. Or I could be wrong and he's going to completely just go off the rails and say whatever the hell he wants. So we'll see what happens. We'll see where it goes on Wednesday, and I'll be streaming it live. Okay, let's take a look at this. We got about 8 minutes till the market opens. We got Publix.com CEO. Let me know if you guys use Public.com at all. He came on CNBC to talk about payment for order flow and the debate between companies that use it and companies that don't use it. Robinhood, obviously a company that uses it. Public, I think a company that's against payment for order flow. Let's see what he has to say and how that is affecting the retail brokerage space. Because another quick point I want to say, Robinhood is now number 15 in the App Store. It hasn't cracked top 20 in a very long time. And that is a sign that I think a lot more people are starting to want to get excited about the markets again, and they're downloading the app. Yeah, right now it's number 14. So it went up from 15 to 14. If it cracks top 10, I think we're starting to get into a little bit of a rally. So let's see what he has to say here.
Now offering options trading. Retail investors use the platform to trade ETFs, bonds, stocks, crypto, and other assets, but it hasn't used payment for order flow in its revenue model since 2021 until today. And we're going to talk about it right now. Joining us right now with more on.
Oh, wow. So now they're using it. Now, so they were against payment for order flow. It seems like now they're going to use it.
The state of the retail traders in the new year. Janik Mowling, he's the CEO of Public.com. Good morning to you.
Good morning.
So for those uninitiated who may not remember the debate that really took over the public discourse for a while about this flow situation. Why don't you explain what you decided to do then and what you're deciding to do now?
Right. So in our equities business, where you're just trading single stocks, back after the events of GameStop, we decided to abandon the payment for order flow concept.
Yes.
The market structure, and today we're launching options trading.
And payment for order flow, for those who don't know, meant that the Citadels of the world and other folks who were effectively paying you, or paying Robinhood for every transaction.
Correct.
And so there was always a question of who was the real customer. Was the customer the one that actually made the trade, or was the customer the market maker who was paying you a fee for you to trade on their platform?
That's been the discourse. And I think at the real heart of that discourse is, what are your incentives as a broker-dealer, and are they aligned with those of your customers?
Right. So you stopped doing it.
Yes.
Did that work for you, first of all?
I think it worked incredibly well. We proved on many occasions that we saw, at many times, more often than not, at least, better execution, because we passed a lot of those savings back into the hands of our customers because they got better execution by us going directly to lit exchanges. There continues to be a lot of discourse. The SEC came out with a proposal, as you probably know, also denoting that there's some conflict of interest here with regards to this model. Now,
it's not allowed in Europe, for example.
It's not allowed in Europe.
But it's
not allowed in Australia either, and maybe Canada as well, I think. Now,
but we should also say that Ken Griffin, who's been on our broadcast before, has also said that he believes that he's actually offering better pricing, and that customers that are trading through them, where they're paying the payment for order flow, actually get a better deal.
Correct.
Then why is he paying for it?
Well, so there's a couple of different nuances here also, by the way, to be mindful of. Number one, the market structure on the equity side is actually quite different from the market structure on the option side. So let me explain. So if you buy an Apple single stock, some market maker pays for almost like the exclusivity to that flow, meaning that they will fill that order. No other market maker will see it. And so we'll never really know whether another market maker could have given you a better price. Now, the options trading market is quite different in that everything gets executed on exchange. So the market maker in the options trading world is really paying for a right of first refusal, or sort of like a first pass on that order, but it still goes to the exchange. And if another market maker comes in and offers a better fill, the customer will see the benefit of that. And so what's interesting is the SEC proposal sort of had some more lingo around this open auction model.
Yeah, that you can't
for the equities as well.
So, but now let's pivot to what you're doing today.
Yes.
Because that is a new announcement that actually relates to taking money for payment for order flow.
Absolutely. So options trading has been one of our most requested features in a long time, but due to all the skepticism of what the incentives are, how it all works, we thought long and hard about how do we bring this to market in a way where it's transparent. And there is no doubt that our incentives are aligned with those of our customers. And at the end of the day, what we decided is to pass half of our options trading order flow revenue directly back to our customers. This means
so you are taking payment for order flow.
So we will take payment for order flow on the options model, but pass half of it back directly to the customers. So it's not just a mechanism that benefits broker dealers and market makers anymore, but end user customers get to see the benefit of it as well.
Like, this is a stupid question maybe, but that sounds like, okay, we're going to sell the order flow exclusively to one broker. We're going to get paid for that, but we'll give you some of the savings.
Well, we won't go exclusive. So in the options market, we will not go exclusive. When everybody will work with various market makers, it'll go to various exchanges. So it's a lot more of an open model. It's not this like restricted competition model. There is actually competition for each order.
Why these guys will pay for this? Like, what's to suggest they're not front running? I mean, why would they pay for the order flow?
That's been a big kind of question for a long time. At the end of the day, we're not a market maker, so we can't even go directly to the exchange as a broker dealer with this flow. So there's no real getting around these market makers in the options trading world, like the model that we have for equities. We just can't do.
Let me ask you this though.
You know, it's interesting. I think that public seemed pretty ideological around payment for order flow. And that's why they're kind of in this conundrum where they now have to justify the savings and the user safety and all this stuff. Robinhood never gave a shit. Robinhood was like, give me the money, dude. And so Robinhood was just like, hey, we don't really care. We're just going to take the money and we're going to provide, the coolest product in the world. And that's what they did. So that's why you have the difference between Robinhood and Public. I wonder if anyone in the chat uses public.com. It's a very interesting company. I actually like the app. I've used it here and there. I don't use it as much as Robinhood, but it is a very interesting product. And they rose to momentum just when Robinhood rose to momentum. Robinhood got about like 20 million users during the pandemic. They got about 3 million. So they still had a lot of users, just not as much as Robinhood. And that's why obviously Robinhood was able to go public, ironically. And Public has not officially been public yet. But, Public is definitely a good product. It's not the worst product. Broccoli Bob says, who are the market makers? I loved how he said market maker as well. He's talked about the market maker. I love the accent. From my understanding, the market makers are basically the citadels of the world, right? They're the people that determine the cost that it will create, the cost that you and I have to pay for an equity or an option. So when we want to buy Palantir at $16.65, there's a market maker that controls the ask and the bid price of that equity. And them controlling the ask and the bid normalizes the price to stabilize at a reasonable, execution price for the individual user. But on options, they also have to have an ask and a bid for certain types of contracts. And there's multiple market makers. Citadel is one of the biggest. I think Citadel's revenue was like 15 billion last year. It was just like ridiculous. It was one of their best years in a very long time. And so the problem with payment for order flow is that when you have a business that's incentivized off of users trading and you're selling that data to the hedge funds and to the market makers have a better understanding of how to front run your trades or how to take certain pennies off of your trade to get you worse prices, even though theoretically that's not what they should be doing. And that's how they make money. Now, granted, if you lose a couple pennies on a trade, it shouldn't matter. But if you're playing with really, really big amounts of money, then maybe it does matter. So that's where the incentives get a little weird. But Robinhood, by the way, up 2% right now in the pre-market. I have no idea why it's up 2% right now, but we'll see what happens when the market opens. But that's kind of the underlying problem with market makers and, how it goes from there. Middlemen, the market makers are middlemen. Yeah, Chris put it in the chat. The market makers are basically middlemen that control it. And Robinhood's basically embraced them. And they said, look, we don't really care. We just want to make money. Our users want a good experience. As long as that happens, then that's all that really matters to us. Okay, folks, it's going to be exciting market open. A bunch of earnings came out today. We'll look at Verizon, Lockheed Martin, look at the Mag 7, the crypto stocks, how they can take it. And we'll see if the market is ready to continue the momentum that it's had over the past 3 days. It is January 23rd at 9:30 a.m. Thank you all for being here. The stock market is now open. Wake your ass up. Here we go. Okay, first notification I just got is that Enphase is up about 6%. So we got SoFi up 2.46%. Enphase right now, there you go, $114, up 6.7%. Not bad at all. Robinhood opening up 2% up on the day, $11.16. Bitcoin is tanking, but Robinhood's going up. So I think a little bit of momentum on the retail rally or just in general individual names is getting the market excited for what's going to happen with Robinhood. ARK Innovation at $47, Tesla $211, Tesla's up 1.5%. Nvidia sells off. Nvidia sells off when the market opens. Wow. I mean, we kind of expected that, right? Nvidia was running up a lot. At some point, it was going to have to take a little bit of a breather. It is absolutely taking a breather today. Nvidia now selling off $593 on Nvidia. So we've got that on Nvidia. Not bad at all for Nvidia. So we got Nvidia there. Verizon, wow, look at that, up 4% of the day, 41.08 right now on Verizon. Not too bad. Alibaba, look at that, up 6.3%. Alibaba, absolutely incredible, up at 6.3% of the day. NEO is up 10.9%. If you're confused why NEO and Alibaba are up, it is because the Chinese government printed not printed, but they're putting $287 billion from different assets they have into the market. And that's what's re-stimulating a lot of these stocks. I don't think it's sustainable, but that is something that they're doing. That's why people are excited. DWAC is down 5%. This is Donald Trump's SPAC. It was up 88% yesterday. So congrats to those who ran it up. But it's now down 5% because that's what happens when you go up 88%. So DWAC is down. GameStop is up a little bit. AMC is up 1.6%. PayPal up 1.2% of the day. Not too bad. Seeing PayPal have some momentum. PayPal is up right now. We got Palantir at 1751. Palantir selling off just a little bit, down 0.62%. Snowflake continuing to rise. Snowflake at $65 billion market cap, 199 right now. Amazon is down just a little bit. Opendoor is down about 1%. Zillow down about 0.11%. Fisker, the stock went up 35% yesterday. Now the stock is up 7% today. So you got Fisker. That's doing pretty well. Fastly's up 1.5%. Microsoft down a little bit. Big Seven are getting sold off. Big Seven are definitely getting sold off. Google's barely up. Meta's up about 0.5%. Apple is actually doing very well. So Apple is now another $3 trillion market cap. Microsoft selling off at 2.94 trillion. Apple at 3.02. The Vision Pro likely sold about 180,000 units in its first day in the pre-orders. So market might be excited that Vision Pro is actually going to sell. And if it does, well, then you're going to have some excitement for a company like Apple. Nvidia selling off. Nvidia down 1% on the day. So market is basically saying, all right, Nvidia, you ran up 25% in the past 2 weeks. We're going to take a little bit of a breather here. Crypto stocks are red. CleanSpark down 5%. Coinbase down 5%, 5.6%. Marathon's down. Riot's down. Iron is down. Cypher's down. MicroStrategy, goodness gracious, down 5.14%. Robinhood's the only one out of these crypto companies that's actually green right now. Because again, it's not just totally crypto. So Robinhood's green. Bitcoin's down. Ethereum down about 6%. Bitfarms is down 3.5%. All these stocks taking a beating. And all these stocks are still up almost 200% over the past 6 months if you look at them. So even though they're down, they are definitely still performing over the past 6 months. Just as Bitcoin has collapsed, it's hard for them to keep doing what they got to do. Rocket Lab is up. Okay, let's look at Rocket Lab. Broccoli Bob says my PayPal options are finally green. Okay, I'm happy for you. That's good. Rocket Lab, yeah, nice. Up 2%, up above that $5 range. It dipped to, I think, like $4.50. So if I back in the sevens, what? No way. Oh my God. Dude, this company, I don't know what they need to do on earnings to perform, but Wall Street just hates this company for some reason, dude. Like 13% short float, Wall Street giving it these downgrades every day. Like I don't even imagine they produce like $10 million of GAAP profitability. Is that even going to be enough for Wall Street to get excited? Or are they going to be like, no, you can take that away. We don't really care. I don't know. But as of now, they have not been giving them the benefit of the doubt. Not giving them the benefit of the doubt. Russell's up 2%. Oh, wow. Russell's up 2%. Russell's up 0.59% right now. 197. Huh. Russell was at 160 in October, by the way. So Russell has done pretty well. These are all the small caps. This is the one that Tom Lee thought was going to do really good. This one, obviously has not performed as well as the Mag 7 this year, but it is still up. Nvidia continuing to sell off now at 587. Yeah, people are taking profits on Nvidia, and it makes sense. I mean, it's up a lot, so I would imagine people take profits. Rumble is up 15%. For those that didn't catch the news yesterday, Dave Portnoy and Barstool Sports. Sorry, that just fell right now. Barstool Sports are investing in Rumble. So Dave Portnoy is now a part owner, and all of Barstool Media is coming to Rumble. I looked at their metrics last night in terms of their numbers. numbers weren't that amazing. It kind of was, you know, I was like, all right, you know, the numbers aren't, it's just, I can't imagine people actually sit there and use Rumble over a lot of other platforms. I know some people really hate YouTube and the censorship and they go to Rumble, but I think the far majority of people want really good tech products, and Rumble is just not that for me yet. I don't think the content's that different than what's on some of the other platforms, but they are growing revenue 64% year over year. Obviously the market's excited that they could, you know, turn profitable. They're a small cap, $1.6 billion market cap. So you see it's up 20% right now. It's hard to time when to speculate on companies like these, because I don't think there's a long-term thesis. I think there's just short-term speculation. Otherwise it's a little bit harder to buy Rumble. So that scared you. Sorry, this computer screen is sometimes randomly just like, I think I banged on the table or something and it fell. Bitcoin down to 38K. BTC down to 38K. Wow, 38.6 on Bitcoin. Yep, down 3.4%. Amit, thoughts on Kick? I think Kick is actually a phenomenal product. Not because, by the way, Verizon up 5% on the day. Look at that. Not because of the product itself, but because they are, for those that don't know what Kick is, it's a Twitch competitor, but they're not a social media company. They're a gambling company called Stake that basically said, hey, we need to market our gambling platform, our online crypto casino platform. And in order to do that, we need a ton of content creators pumping our casino games. The easiest way to do this is just to pay people to live stream it. So they started paying all these Twitch creators, and then Twitch banned them because Twitch was like, oh, this is unethical. You're teaching kids to gamble. And they're like, all right, screw it. We're going to make our own platform. And so they made a website called kick.com, and they signed some of the biggest streamers in the world. Aiden Ross is a streamer that got a $250 million deal. I mean, that's how much money these guys have. They sponsored Drake. They've probably given Drake, you know, close to $500 million. And now they just have a bunch of streamers on the platform streaming, you know, all day, a lot of stuff. One of those being the verticals of just gambling on their online casino, and they're making a crap ton of money off that. So Kick is cool to me because it's a company that is profitable because they're not relying on ads. Like, it's like the website is like barely any ads at all because they have something else that subsidizes it. And that's probably a model that's, you know, more effective. Obviously, Twitch still not profitable yet, but the content they have is definitely different than the content on Rumble, and live streamings are just way more, you know, entertaining than podcasts on Rumble. Drake has lost more than $500,000 on Stake. Yeah, but he's made a lot of money too, dude. He's probably lost like 500,000 in some trades, but he's made tons of money on Stake in terms of just like his gambling. I think he's made like 2 million once in a single trade. But nonetheless, it has definitely been good marketing for Stake. DNA, Ginkgo Bioworks up 4% right now. Meta 384. Meta trying to close in on $1 trillion. Meta's $13 billion away. Sorry, $12 billion away from $1 trillion. Last time they got there was 2021. So we'll see if they can get there now. Netflix, again, earnings are today. I'll be live streaming that on the channel. 488 up 0.47%. Street is expecting about 8.8 million subs and about 250 million global subscribers that are paying. And I think they're expecting like 5 or 6 million ad paying subscribers. So Netflix needs to perform. It's a consumer-based app. We need to make sure the consumer's in a good position. If Netflix isn't growing, that means if you can't get people to subscribe for 10, 15 bucks a month, there's a problem with the consumer. So that's why it's definitely a very important company, in my opinion, when we're looking at the state of the consumer. PayPal up about 2% on the day. How is Twitch different from YouTube live streams? It's not really different. Twitch just has a different culture on it. And, you know, they were in live before YouTube really got into live. So they had like a first market mover advantage. But a lot of people still stream on YouTube. Obviously, I'm streaming on YouTube as well. And the thing about YouTube, again, there's an algorithm. Twitch doesn't have an algorithm. So on YouTube, after this live stream is done, YouTube can show it to more people and they might end up clicking on it. Twitch doesn't do that. Like Twitch, you have to bring your audience, and they've been very explicit about that. Like that's just not their goal. So it is a little bit of a different relationship with streamers that they have. But YouTube, I think, is still great for streaming. Baba up 8% on the day. Wow. Look at that. Look at Alibaba run. Again, I feel that as cool as this is an artificial pump by the Chinese government, and it's not sustainable because you have to get other investors to want to get excited to buy this thing. And look, if Alibaba, if China shows that they're going to actually change what they're doing in their economy to adapt, then maybe. But as of now, an 8% pump is awesome. But I mean, $280 billion is not enough to save an entire stock market that has had trillions of dollars of outflows because people just got fed up with the CCP. So we'll see where it goes from there. Let's check on SLG. That's a REIT we haven't talked about in a while. SLG, oh wow, they're up 2% on the day. Look at that. 47.94 on SLG. We were talking about this one at 19 in March. I think I sold my shares at 38 bucks. So I did not stay for the long run, but SLG at 47.54, not bad at all. Nvidia continued to get hammered. Nvidia 592. Amazon's red a little bit. Palantir 1768. Palantir is now in the green. Why did Palantir run up so much yesterday? Honestly, I think the market just wanted more AI exposure. The macro is doing well. And whenever the market wants AI exposure, they're looking for the cheapest AI names. Palantir is not necessarily cheap, but it is a market cap basis. On a market cap basis, it is cheaper than obviously the Microsofts and Snowflakes and Datadogs of the world, or Datadog's a little bit cheaper than them, but $38 billion. You would imagine that a lot of fund advisors are just like, well, Palantir at 38 billion is cooler than Microsoft at 3 trillion when it comes to AI. Remember, Microsoft earnings also, they have to perform, because I think the street's giving a ridiculous multiple to Microsoft for not really performing yet. And if Microsoft does not showcase that their AI growth is actually tangible in terms of legitimate earnings, it's going to be a really tough, I think, earnings for Microsoft. And I think they will. I think Satya Nadella is pretty confident. But if they don't, a lot of these AI stocks like Palantir are going to go to shit as well. Because if Microsoft's not doing well in AI, some of these other companies are not going to be doing. So we got to see what ends up happening from there. Google at 148.36. Google, again, trying to close in on that $150 range. 3% on Tesla, not bad. Yeah, Tesla also up 3%. Again, I think tomorrow on earnings, Tesla's going to try to say that the energy business is doing well. Tesla's going to try to say that our margins are getting better, even if we're doing price cuts. And I think Tesla's going to hit back against this argument about demand in particular, because the Morgan Stanley note that just came out yesterday said that EV demand is stalling. And, we've heard EV demand is falling off a cliff many times over the past couple of years. I mean, maybe that's true, but maybe that's really just, short-lived, and EV demand is obviously here to stay. And so we'll see what Tesla says, but I think they're going to hit back against the argument that demand is necessarily falling off, because in their numbers, even if they're lowering prices, they could probably argue that demand is stable and that demand's probably not going to be, in the worst position. Let's get an update on Apple. Apple finally got upgraded from Bank of America to about $225 after getting downgraded from Barclays to $165. Let's see what the street believes Apple.
See it in a positive light. It's been caught in a lot of cross currents. Some people not liking it, penalizing it. Others, like you, liking it a good deal more.
Yeah, Charlie, you're right. Listen, you've had a few headwinds in the last 2 months, I would say. The China worries, which I concede are there. There is an issue in China they have to figure out. You had the Apple Watch stuff. You've had some regulatory stuff. So that's the whirlwind they're caught in. Our take really in the call we have is while we get the negatives, I think people are forgetting there is a ton of positives on the other side. And the things that we're trying to point folks towards is, iPhone demand is actually relatively stable in North America and actually really good in places like India and other emerging markets. This will help offset some of the China weakness. The second thing that we really we get excited about is services. We think will show double-digit growth and actually show a sustained acceleration. And if services can move in that right direction, which I think they will, that has an outsized benefit on gross margins and profitability for Apple as you go forward. And so I think that's the other part that's getting forgotten about. And the third part I would say is Vision Pro. Again, the product's been out today. Initial demand delivery dates look like they're getting pushed out pretty extensively. Again, I'm sure the units are very small, but I think to the extent Vision Pro is a successful product, it perhaps tells you innovation at Apple is alive and well for the next mode of compute that may happen. So I think a combination of those three things in light of how much underperformance we've had on the stock is really what makes us bullish here.
Again, that also depends on the Vision Pro, and maybe it's just me. You guys know my thoughts on it. I'm just not bullish on the Vision Pro at all. I just don't think people are going to use that as much as people think they're going to use it, So that's why it's a little tougher for me to get excited about it. But the analysts will pump the stock. I do think the stock's going to get closer to that 220 level that a lot of people think it can get to, just based on the sheer fact that people are going to be excited for the perception of the Vision Pro. But is it actually going to be something that people use to the point where they sell hundreds of millions of devices of it? I don't think so. I personally just don't think so. And if that's not going to happen, then it's going to be tough to imagine that it's going to do that well. Let's get into a bunch of different earnings. We got to talk about these to kind of see where the state of the economy is at right now. Here is Procter & Gamble earnings. So earnings per share, 184 versus 170. Not bad. Revenue, 21.44 billion versus 21.48. So just a slight miss. Procter & Gamble makes a ton of consumer products. Gillette, Tide, If you're in the States, even across the world, I'm sure you've seen a lot of this stuff. And so that is the nature of this company. After roughly 2 years of higher prices on their Charmin toilet paper, oh wow, they make that too, I don't know, and Downy fabric softener, consumers have pulled back on their purchases of P&G products. The company's volume was flat overall for the quarter, and only its grooming business reported volume growth. The metric excludes the impact of currency and pricing changes to reflect demand. The grooming division, which includes Gillette, saw volume grow 1% in the quarter. P&G's beauty segment reported flat volume for the quarter as sales of its pricey skincare brand continue to struggle. Its fabric and home care business also reported flat volume. So what we're seeing already is that a lot of the core brands that it owns underneath it are buying or are having flat volume, even if their revenue is accelerating slightly. So we're seeing some issues there in the context of P&G. Now, this also makes sense. Obviously, the consumer is not necessarily in the best position, but the consumer is not in the worst position. So at least we're not seeing volume decline. If we saw volume decline, like people are buying way less Gillette than before, Gillette shaving products don't cost that much money. So if people are buying less of it, then that's bad. If they're just buying the same amount, then hopefully it's not in the worst position. Chris in the chat says, Amit, look at your phone. I'm looking at my iPad right now where I got your text message. And Chris just sent me his Verizon gains on some of these contracts. He's up a decent amount of money. Let's just say that. He's up a decent amount of money. You know, it's so funny. Chris called me back in like October when he started to go all in on Verizon. Not all in, but you know what I mean? Like I put a decent amount of money in Verizon. Obviously, Verizon doing well right now. They're one of the companies that had good earnings. PG&E didn't have the best earnings, even if volume was flat. Revenue slightly declined. Street was like, wasn't that excited about it. Verizon had a gangbuster quarter that showed subscriber growth. And Chris put in a decent amount of money into these guys. I mean, a pretty decent amount of money into these guys when they sold off to about $29 in October 9th is when he bought these. So doing well in that position. And it's seeming like it's not doing too bad. Might buy Gillette products, have to see if it's still woke. Gillette went woke? I think they had a commercial about being what it means to be a man, right? That's what you're referring to in terms of it being woke. Damn, that was like 3 years ago, dude. I remember that. That was a while ago. Yeah, I don't shave. You guys know me. So for me, I don't use Gillette anymore. But at one point I did. Damn, Chris, I'm looking at this. This is a lot. You should have told somebody about this, dude. If you told me, I would have bought some of these with you. Fucking didn't share the wealth of information. No, I'm just kidding. Still remember people giving me shit because it was low beta. Yeah, dude. I mean, look, the thing about Verizon that I think people got wrong when it was at $29 and people were saying Chris should be buying Tesla at $250, because there were people on finance like, oh, buy Tesla at $250. Why are you buying the stupid Verizon? Is that like at some point valuation does have to matter. SoFi right now $795, and Tesla has been absolute dog shit since October because Tesla has not been able to get the valuation to have a lot of support. Whereas a company like Verizon that got sold off to 5-year lows, at some point, all it can do is go up. And now I say this metaphorically in the context of obviously can the company go down? Yes. But if it's a solid business that's growing, like same thing with PayPal, at some level, the market recognizes, wait a second, there's alpha here. Why the hell is it sold off? And I think Chris found that in Truist. Chris found that in Verizon. And I think likely the same thing is going to happen with PayPal, which is that if it just reverts back to the mean or even one half of the mean, you make a shit ton of money riding it back up to the top versus thinking that Tesla can go from 250 to 300, right? And it was the same thing for me. I mean, even on my live chat, there were people saying buy Tesla at 270. It's like, no, dude. Like at some level, if you're buying it at 270, you only make money unless it goes to 271. And every incremental dollar it has to go up, it has to meaningfully perform. Whereas a company that's been sold off dramatically, like a Robinhood at $8, they don't even have to meaningfully perform. All they have to do is do a little okay, and the market's going to be like, all right, we'll buy their stock because they're doing better and the stock's cheap. And I think those are the plays that are actually not too bad at all. Not too bad at all. I bought a 10-pack of Gillette razors 2 years ago. Haven't touched 9 of them. Used the sheep shears on my beard. Yeah, dude, I've not used it in so long. The best a man can get. AT&T at 17. Is AT&T up right now? AT&T is probably, yeah, look at that. AT&T is up 2.4%. Now, the thing about AT&T is a little bit of a different company than Verizon, okay? AT&T has been stuck for the past couple of years in like the $20 range. Verizon's actually growing. I don't know everything fundamental about AT&T, but I don't know if AT&T is going to have the same bull case play out that Verizon had. You know, I mean, Chris was taking definitely a risk doing options on a company that got sold off that much, even though the alpha was in the fact that it got sold off that much. But you have to really know the fundamentals of the company. I wouldn't be bullish betting on like a $25 call option on AT&T just because I don't know that much about AT&T, and I think AT&T has been stuck in the same range for so many years that it's kind of capitulated at this level because investors have been okay with the dividend. Whereas Verizon, you know, it was at $50 with the dividend. It went to $30 with the dividend. So you would argue that it could get back to that $45 range if it just doesn't sell off as much. So not too bad. Any guys that shave their back or chest in here? LOL. I don't do that. I don't. I mean, needs to bring the beard back, dude. I've been thinking about it, but the beard adds like 5 pounds of weight to my face. That's why I can't do it. Like, I'm trying to get skinnier already, and when you have a beard, that shit just makes you so much bigger. Like, I can't believe I kept the beard for as long as I kept it, because I really do like myself without I kept the beard for 5 years, dude. Like, I really do like myself without the beard, but for 5 years I kept that thing. Like, that's a lot. Like, it's a long time holding on to that bad boy. And you know, I kept it. So maybe I'll bring it back, but for now, probably not. Okay, let's get a little bit more coverage on where the market is going. So here is an analyst talking about why the market still has more gains to see, but there's going to be others that lead that rally, not necessarily the big 7 that we've seen so far. Let me pull this up right here. Do you think Alex Chris can turn PayPal around? I do. I think January 25th is going to be exciting. I think he's going to turn it around, and I think we're going to walk into something super cool for PayPal.
Situation right now on Wall Street, new highs for blue chips in the broader market. It is important to note that tech still is showing some leadership, even though we saw things broaden out a bit. Do you think this is sustainable? Are we going to continue to see more gains this year?
Well, yeah, look, we think certainly we're going to see more gains this year. Probably going to be tech-led, maybe not the tech that everybody's thinking about right now, but like, you know, probably not the hardware tech part is going to lead, you know, in terms of semiconductors. We're probably past the hardware part of the AI trade. We're probably moving into the more the services part, more the use case part of the AI trade. That's frankly going to be the more interesting part of that trade, we think. But it's also going to be broader, and it's going to be much more the market can participate in that kind of trade. And we think that's going to be probably the largest driver in 2024.
Okay. Despite these new highs, again, for the Dow and the S&P, you actually believe that Wall Street is having a vibes recession, or as you call it, a vibe session. So give us a sense. We got some big data reports out this week. You think there's a disconnect between the hard data and the soft data? This week, we have PCE, we have GDP. We've got a lot to kind of weigh and chew on. What's going on with the vibe session? Do you think it continues after this week?
You know, like that may be starting to end. And, you know, and by vibe session, this is not something that I necessarily came up with, but certainly something that I think describes what's going on in markets, going on in the economy for much of the last year. And all that means is that the way that people feel and the way that people have been answering surveys is very different from the reality of how they actually are in their real lives. We know that everybody's flush with cash. We know that balance sheets are in really good shape. But when they answer surveys, they are very, very, like almost despondent in the way they answer surveys. And so, you know, we got the first, you know, so basically, you know, this divergence between sort of the soft data, the survey data, and like how I feel versus how I actually am.
Okay.
You know, that divergence we think actually may be starting to close. We might have gotten our first inkling of that with the University of Michigan sentiment indexes released last week.
That sentiment index was actually pretty good. I just want to look at the 10-year, and then we'll end it off here. 10-year right now, 4.14, so it's up a little bit. Makes sense. Stocks are a little bit down this market, even though not a lot. And then, so let me just share that real quick. Then I want to check the Fed CME tool and see what we've got going on here in regards to rate cuts. So 10 years at 4.14. It's up from 3.85. We still have about 6 trillion in those money markets. Has that been updated yet? No, that's not. So it decreased by 14 billion. So we did see a little bit of a decrease last week. And then CME tool right now for March. Oh, wow. It's down a lot. Holy crap. It's down a lot. Dude, it's down to 41%. It was at 70% last week for a March cut. I guess the data was like, nope, The data said we are not going to get excited for this one. We are not going to get excited. May, we're at about 80%. In June, we're at same thing, around 80%. But in March, it went down from 70 to 40. Just like that, things have changed. Just like that, the street is like, maybe March cut's not going to happen. Wow. All right. Well, that's what we got here on the Fed CME watch tool. Someone said about Netflix WWE. Yes, we talked about it. If you go to the 4-minute and 3 part of the live stream after we end it, you'll be able to see we did a whole segment on that. I think it's very bullish for Netflix, very good for TKO, the parent company. Their stock, let's see how they just opened up. TKO is at up 19%, $92. They're the ones that own WWE. Bullish all around for, Netflix trying to get into live as well. Okay, we'll end it off on word of the day, and then we'll be done for today, Tuesday morning. Thank you all for being here. Word of the day is buttonhole.
Buttonhole.
Dude, as soon as I saw that, I was about to say butthole. I was buttonhole. Okay, to abruptly detain someone in conversation. I have never heard this word before. This is one of those words you can actually use, okay? The enthusiastic salesperson eager to showcase the latest products buttonholed the customer as they entered the store. It just sounds like, okay, I was in a rush to catch my train, but my colleague buttonholed me in the hallway to discuss a new project. It just sounds like you would use this word in a different context. Buttonhole. Jesse in the chat says buy buttonhole. It just sounds like one of those words you would use differently when you say you buttonholed something. Anyway, to abruptly detain someone in conversation. So yeah, next time someone's taking up too much of your time and they're like holding you back, just say, yo, stop buttonholing me because I need to go and make my money. Okay? Because I got shit to do. I got money to make. And having said that, that's where we end the market open stream. Thank you, everybody. I'll be back at 3:45 for the market close, and we'll keep going from there. And we'll see what things are happening at in the next couple hours. Astrica says you can buttonhole me. That's hilarious. I hope everyone listening is wearing headphones. Oh, my goodness. All right, guys. I will see you guys at 3:45. Bye, everyone. Have a good one.